Hey, what's going on, everybody? Corey Smith here with CoreFX. Welcome back to another pre-week market analysis video here through T3 Live's YouTube. Today is March 10th, 2018. It's Saturday. The week for next week starts March 11th. If you're new to these videos, basically what I'm going to do here is cover a quick breakdown of what happened last week in the markets, March 4th week, March 4th through the 9th. Everything going on with the major 8 currency pairs, everything going on fundamentally in the global macro environments. Then I'm going to go over also all the charts on a technical basis for the indexes for each pair, so the Dixie for the dollar, and then all the different index pairs, weighted baskets of each individual currency, to go over the major levels, the trends, and where I'm looking to potentially see prices go the week ahead and what they've done the past week. I'll go over all the news events for the week ahead, what we're going to be looking for, what events are worth trading, what events we should be careful trading around, and what events have been watched lately more closely by investors, traders, central bankers, all this stuff. I also go over a quick breakdown of the strongest and weakest performing pairs of last week. So, quick little breakdown of myself. My name's Corey Smith. I own CoreFX Trading, foreign currency trading education company. I have an online foreign currency trading course, as you guys can see here. It's got all different aspects of it, from exact trading strategies to how to properly approach the markets with testing, demo trading, live trading, all the technical analysis breakdown, as well as some risk management, psychology, setting goals, how to develop a trading plan. It's a very in-depth mentorship found here on my website, curefxtrading.com. And I've been doing these videos through T3's YouTube page. T3 has some excellent content, some great traders with their company, and subscribe to their page if you like what we're seeing here, guys. Leave some comments, some feedback. If there's anything in particular you want me to cover. Otherwise, I'm going to go ahead and jump into this video here. Just wanted to let everybody know who watches these weekly. I am not going to be able to do next weekend's video. Unfortunately, I'm going to be out of town, so I won't be able to cover it. But if you guys stay up to date with my video, my YouTube page, I will be uploading some stuff on there as well. Gonna go ahead and jump into it here, guys. Starting last week, we had the Australian dollar, Canadian dollar, and New Zealand dollar as the top 3 performers. Pound not too far behind. Not too strong of a week as far as volatility goes in the Forex markets. Everything's under 1.5% moves. Nothing too crazy. We had a strong lineup of events last week. 3 central bank meetings, NFP, jobs out of Canada, Trump tariffs, a lot of things going on. However, there wasn't too much volatility in the FX markets. Equities saw some strong moves, but the FX markets weren't too crazy. The Swiss franc, Japanese yen, euro, bottom 3 performers. This right here shows us a risk on week. We had U.S. stock markets rallying and recovering some of the losses that we've seen in the past month or so, and we also have some different mixed events going on. We had the tariff happen, but then we had Canada and Mexico temporarily left out of it as national security, and NAFTA trades are deals are likely to be negotiated on to fill them in. North Korea agreed to meet with President Donald Trump, and Donald Trump agreed to meet with North Korea. So some good geopolitical news. And really, we just saw a nice risk-on environment feel this week. That's why we saw the Japanese yen and the Swiss franc and the euro as the bottom performers, and the Aussie CAD New Zealand growth currencies as the top performers. Those are typically going to be typically the way things work when we have this risk on. Risk off will be the opposite. We'll have the risk off currencies, the safe haven currencies like the yen, the franc, euro, dollar, all top performing, while the growth currencies of Aussie, New Zealand, CAD usually underperform. So this usually, when we see this look, it's from a risk on move sentiment in the markets, and that is exactly what we saw. Taking us into the charts, starting with the US dollar. As you guys know, we've been in this nice downtrend. We had this double bottom. We had it bullish engulfing off of it, and as I said, we were likely to move higher. We did. We came back up to this supply zone overhead resistance. We temporarily tried to break out, setting this higher high, but then quickly reversed back under, and now we bounced off support again. with a bullish engulfing off support again. So we're in a pretty strong inflection point. We're on the 50 SMA. We did set a higher high and a higher low, so we could move up and now come back up to set a higher high. However, we are still below this zone, this supply zone. We're still below the 50 SMA. So we're going to have to wait to see if we get some further price action showing us this. We could follow this. Oops, sorry about that. We could follow this trend line up if we get these moves. If we get an uptrend coming out of this, we could follow this trend line. We get a higher high, then price pulls back into this zone on the trend line, pulls back higher, so that's something we could see. But price could also break this support. If price breaks this 89.50 support area here, I'm going to look for a lower low to be made, even below this support down here. However, as long as price trades above this, there is the potential for it to set a higher high and continue higher. Euro, pretty much just in this high choppy range still. Somewhat of a flag pennant pattern. However, we had this look like break lower from this support, but it actually happened to be a false breakout outside reversal, because as soon as price opened down here, we ended up closing on the day with a big bullish engulfing candle, reversing right out of that, back up to retest this upper trend line here now, and now it's kind of just range bound in between here. So until we get a break out of this range, not really too convinced either way on the directional bias of the euro. Japanese yen, although I was expecting it to be higher this week, it didn't. It moved lower. It opened up here and ended up selling off. However, we are still up above this strong range that I showed you guys, this yearly range we broke out of with this move. Came back to retest, pushed higher again. We came back to retest again now. I think the yen is certainly ready to move higher again. Bank of Japan met last week, and although there wasn't too much bullish yen movement off of it, they did recognize some strength in the yen over the past few years. Inflation's still a worry, but there are some fundamental good things going on in Japan with the yen, so something to keep an eye on. Technically, I do like it to the upside as well, so I'll be watching for long yen trades for the next short-term period as long as we remain above this range. Pound, not much changed. We're still in this same exact range we were in last week. All we did was chop around a little bit right in here. We're looking for a break of this counter trend line to the upside. I do think that there is a nice risk-reward potential for that. If we break that to the upside, we have room back up to the top of this prior high. So I'll be watching for that. However, this bottom trend line could break, and we could see a continued rollover like we've seen here, because this is somewhat trend changing with these lower lows that we're making. However, price is so consolidated. There's no strong moves. There's no strong trend reversal. It's just been slow, choppy price action. So we'll have to wait and see what the pound does as well. Canadian dollar, we saw we are on this downfall, coming down. We broke lower, but price quickly pulled back up. And although we did come down here, set a lower low, and could pull back to a lower high, one thing I want you guys to focus on is these rejection wicks down here. So price opened down here, or price pushed all the way down here throughout the day, back down to the lows of this day, pushed all the way back up, ended up closing above the open, right? So we had a bullish close when price tried to move all the way down lower. The next day we opened up here again, price tried to push down again, price got rejected, pushed higher, and then on Friday we had price open and push higher all the way up here. So to me, this is more of an outside reversal, false breakout. Price came and pushed right back into the range. I will be looking for a pullback to around this area, and then a potential move back to the downside. But for right now, we're back above this support. We're back in this area, so we can't really be looking for any too strong of short signals until we get some kind of confirmation that we're bouncing and setting a lower high and moving back down to the low. Swiss franc, another sell-off this week from this pair. As you guys can see, we were in this very strong uptrend, and we thought we could continue higher. However, we set a lower low here when we broke structure of this low, moved down here to set this lower low. Then we rallied up to set this lower high and formed another lower low this week. So we could look to watch for this to continue. Maybe we see a little bit of a pullback up to about this range, and then we see the Swiss franc sell off again and continue lower with another lower low. Something to keep an eye out for. Again, not a very strong trending, clear looking pair. None of these charts are really looking too great, but we still got to get some kind of an idea of where we think price is likely to head. Aussie, this is a cleaner chart in my opinion. We set this strong move higher, but then we had this strong move lower, setting a lower low. We came back up here, set a lower high. Price came back down to set a lower low. We've now pulled back up to a nice range for a lower high. We've got a nice little supply zone here that price has now come up and hit. Also a nice resistance area. So we'll see if price is able to bounce off this and continue lower. We got this strong weekly trend line down here that price can very likely come down to and retouch down here. We'll have to wait and see, but I think this is a good opportunity to short the Australian dollar at the top of this resistance here. New Zealand dollar, as you guys see, we are still in this range. You guys, I showed you guys how we set a high, then we set a higher low. Higher high was retested, higher low retested. We're still in this structure, still in this basing pattern here. We were at the bottom of support last week, and we did expect there to be a move off of it to the upside. We got this nice bullish candle here, push off of it. However, price still remained pretty much flat. Didn't really move much. So we're going to be looking for that sustained move potentially this week if we can see this price push back up to the 74 range and maybe even push up higher and out of it. But again, I would be more bullish on the New Zealand dollar than anything, but we can't really jump to any conclusions as the charts aren't too clear of a direction. Taking us into the news last week, starting with Sunday, we had elections out of Europe again this time, the parliamentary elections in Italy. There was record turnout for the anti-establishment far-right parties. This was something that was not really expected, and the elections actually resulted in a gridlock. None of the three major parties won a majority, which means they're basically going to have to form a coalition like we've been seeing a lot with these elections all around the world. There's a lot of political disagreement and unrest around the world, and it's really starting to be, it's really apparent in elections when you see these parties, either the far-right silent majorities coming in out of nowhere, and really a lot of these anti-establishment moves are coming in, and they're not necessarily winning majority, but they're getting a lot bigger turnouts than there's been in the past, and they're starting to create these gridlock scenarios, which just gives another headache to Europe. The euro didn't really react to it, not really too much for the euro to worry about at this point, but it's something to watch in the future, as it's just another problem for Europe and the European Union that they're going to have to deal with, like we've seen in Spain and other places all over Europe. So it's something to keep an eye on. We want to watch these anti-establishment movements to see if they affect Europe and the euro, as more and more indecision and dispute goes on between these nations that are all forming this eurozone. So nothing too crazy going on there, but definitely something we want to keep an eye on, see which parties form coalitions and gain majority, and something to keep an eye on over there in Europe, as this is one of the bigger countries. Excuse me. All right, Monday, the 5th, last week, we started with services PMI out of Great Britain. We had the Purchasing Managers Index for the services sector beat expectations. Again, these results aren't really too crazy, but it's something to watch and can give that pound momentum in the London session for some trading opportunities. Then we had the Australian dollar's current account and retail sales, both missed expectations, both overshadowed though by the RBA rate statement that came out at 10:30 that night. Basically, the Reserve Bank of Australia, the central bank in Australia, they left the overnight interest rates unchanged as expected at 1.5%, record lows for the 17th straight meeting. Sluggish wage growth and inflation struggles are holding them back. Basically the same thing we've been seeing around the world that I go over with you guys every week. They still indicate the same message they've been portraying, which is that they are in no rush to hike rates, and the next hike is not expected now until February of 2019. So we'll have to wait and see if their rhetoric changes in these meetings up until then, but there's not much giving them any sign of having to hike rates any sooner. This did lead to a bullish Australian dollar, so we saw some bullish price action off the Aussie out of this, but nothing too crazy. Tuesday, we had nothing really much going on until another Australian dollar event, which was their GDP, their quarterly reading, and it missed expectations. 0.5 percentage point was the expectations. 0.4% was the reality. Aussie missed this data, but it was still bullish, so they shrugged off the bad data. And the RBA statement earlier the night before was strong enough to continue this bullish momentum. On Wednesday, we had the U.S. tariffs enforced. The Bank of Canada also met on Wednesday, and they left rates unchanged. They've been in a rate hike cycle. As you guys know, they've hiked rates 3 times, and we've been watching to see if they will continue hiking. And they left rates unchanged. A lot of it, as taken by the meetings, was due to uncertainties in global trade amid the tariffs set by Donald Trump for steel and aluminum into the U.S. As you know, Canada and the U.S. are very big trading partners, and a tariff like that could really impact things. However, there's also scare that other nations are going to hike tariffs of other forms in order to counter the U.S. with this tariff. Also, Canada's been worried about NAFTA negotiations, North American Free Trade Agreement, which basically allows Canada, Mexico, and the U.S. to trade freely. This is another thing that they've been worried about, another thing holding them back from hiking rates. They're happy with the economy over the last few quarters, though. However, these uncertainties have held them off hiking. They do acknowledge higher rates are needed over time, but they're taking a cautious and measured approach. So the CAD was very choppy off of these readings and ended the day higher with an outside reversal that I showed you guys on the chart. Later on Wednesday night, we had Australia and China trade balance, and both beat expectations, continuing that rally in the Aussie that we saw as both of these readings impact the Australian economy and the New Zealand economy, as they are very closely related with China. And also, China has an impact on the overall sentiment in the markets, as they're the second biggest economy in the world, and when they are doing good, typically sentiment is higher, and when they're doing poorly, typically sentiment is lower. Basically, people's overall expectations of the global economy, economic environment, and everything like that. So this also helped lead to the risk-on environment we had all week. Then on Thursday, we had the European Central Bank rate statement. And also, this was the day that Trump's tariffs got enforced. The ECB left rates unchanged as we had expected. Weren't really expecting any hike there out of the European Central Bank at their 0% flat rate. But as we know, they have been carrying on an extensive bond purchasing program, economic stimulus plan, where the ECB purchases a lot of bonds, which dumps money into the environment, into the economy, and really just stimulates the whole economy. And although they remain with their bond purchasing and could extend it past September, they will not be making any bigger purchases. At least they didn't reference to the possibility of them purchasing more. So they've cut back on their size and the amount of billions they were purchasing per month. And basically, they've kept on the table going back up and purchasing bigger purchases again. Until this meeting, this is the first time they haven't referenced it. So this is showing another small step in the direction of ending this 3-year-old stimulus plan for the ECB. One of their major concerns is a global trade war, just like Canada, just like a lot of places in the world. 2018 growth forecast was increased from 2.3% to 2.4%, so a slightly more optimistic view of the economy out of the European Central Bank. But it's predicted to be off for years to come. So it's expected to go up in 2018, but they're not really expecting it to continue. Initially, the euro was strong, but then during Draghi's press conference after, it did sell off slightly. Again, not too crazy or dramatic of a movement at all, though. China, we had CPI and PPI. CPI beat expectations. PPI slightly missed. Nothing really big going on here, though. Not too much of market impact, as markets were kind of watching this Bank of Japan rate statement. They left rates unchanged as expected also, so all three central banks, nobody changed their rates. Japan left them at negative 0.1%. Kuroda said the Japanese economy has improved a lot over the last 50 years. All growth and inflation expectations left unchanged out of this meeting. So really no different outlook on monetary policy. 2% inflation target is still way off. They are still struggling to even hit 1.5% inflation, so they're not likely to change their stimulus. Their quantitative easing that we've seen out of Europe as well is not really likely to continue. One of their major concerns is this inflation, and until that target 2% is closer to being hit, that's really not likely to change according to them. And their stimulus is likely to pick up until this inflation starts to follow. Taking us into Friday, we had pound manufacturing production month over month miss expectations slightly. So we know this is their output, the production that they produce with manufacturing. And it missed expectations, not the biggest deal. And again, we saw very lack of movement out of the pound this week. So nothing too crazy being watched by investors with this data. Then we had CAD and US dollars monthly jobs report. Typically always follows on the first Friday of the month. CAD jobs report, unemployment rate ticked lower, but less jobs were created than expected. So we've been seeing a lot of this lately with these mixed job reports. One number is better, one number is worse, or they're both around expectations, and there hasn't been too much volatility. 5.9 to 5.8%, their unemployment rate went down. However, their jobs were they were predicting around 21,000 jobs created, and only 15,500 were created. So slightly missed their employment change, but the unemployment rate ticked higher. So kind of a mixed bag there. And the CAD did push higher significantly off of this. I guess that unemployment rate ticking lower was more heavily weighed in than this lacking job creation. So the CAD did jump higher on Friday, and U.S. dollar had mixed across the board. The U.S. economy created a lot more jobs than expected. They created 313,000 jobs in February as opposed to the 200,000 that they were expecting. However, this average hourly earnings, our wage growth number, that has been looking good lately. We had it grow last reading and met the 0.3 expectations, which is pretty strong. The meeting before that, however, we're back down to this 0.1%, and this missed report for average hourly earnings, as well as the unemployment rate ticked back up from 4% to 4.1%. So a mixed bag out of the dollar, left the U.S. dollar choppy, not much movement, and no real follow through either direction out of the U.S. dollar. So nothing too good or interesting going on with that report out of the dollar. Now, taking us into next week, we have starting on Sunday, March 11th. This is the next week ahead now we're going to look at. Not much really going on. We have inflation data out of the U.S. We have a rate statement out of Swiss franc. But other than that, we'll pretty much have a sluggish week here, which is good for technical analysis, technical trading, when there's not much fundamentals to cause crazy swings. Even though fundamentals guides price, technical analysis is what the structure it follows. So fundamental analysis pushes price, and the technicals pretty much show the areas it's going to bounce and respect and move through. So we got to keep an eye on both. We want to understand what's going fundamentally so we know which direction price is moving, and then we use that to then see where price is respecting these levels. And also, if price disagrees with fundamentals, that is going to be your most important thing to watch. Price is always right. Price is always king. And even though there could be strong data, if investors and traders are not agreeing that data, the strength of that data is there, or that there's something else that matters more than that data, whatever it may be. Price action is the actual representation of the actions of all the traders and investors and banks. So we want to watch the actual reaction, the actual movement, the actual purchasing and selling over what these news announcements tell us and what the actual data is, but we still need to be aware of when they're occurring, what they mean, what they are, what nations are affected by which ones, and all that. You can't just be oblivious to fundamental analysis and trade these markets. So starting with Sunday, we have nothing going on. Again, I tell you guys all the time, when there's nothing going on a Sunday, you really don't want to be in the markets. I know you've been waiting all weekend. The second they open, you just want to jump in trades. But really, this is a chance to work on your discipline. Mondays as well, when there's nothing going on, can also be a bad time to trade. Some Monday mornings, the market's open with momentum. You can usually get a gauge from the London Open on Sunday night and a Monday morning how the day is going to look, but neither one of them are really any reason to trade on. If you do, then you pretty much are just impatient and you're just being greedy and want to hop in the markets, or you're being fearful and you don't want to miss out on opportunities. However, you really want to start disciplining yourself. You might say, oh, it's Sunday or Monday, but it's the best setup ever. You should only be trading the best setups ever. You shouldn't be taking a trade in any direction unless it's the best setup ever. That's why we have a trading plan and a strategy that we develop with only the perfect setups. So that you're not trading a half-decent setup or a half-perfect setup. You're trading only the perfect setups. So a perfect setup occurring at the wrong time is not a perfect setup. That's an imperfect setup. You want a perfect setup at the right time because that time is part of your setup and that makes it perfect, right? You want a perfect setup at the U.S. Open on a Tuesday, Wednesday, Thursday. You want a perfect setup right on time of a minor news event that's going to give you a nice boost, something like that. You want to have perfect timing as well as a perfect setup. Otherwise, you're really just damaging yourself, your own psychology, your own trading account, your own everything, and it can be really detrimental, honestly. So Monday, we don't have much going on except for Australia's business confidence report. Again, this is 350 businesses surveyed to rate the overall business conditions in Australia, and basically just gives us a leading indicator of how businesses feel about the economy, which impacts their decision making and can have a leading impact on the markets. So it takes us into Tuesday. We have the pound annual budget. This is going to be their government's budget for the year to come. It shows all their spending and borrowing, which has a huge impact on supply and demand of the currency of the British pound. So it's something we want to watch and could cause some movements in this currency. Then on Tuesday, we have the strongest report of the week, really, the consumer price index out of the U.S. This is one of the highest followed and watched pieces of data for the U.S. Federal Reserve, the people that are responsible for hiking our interest rates in the U.S. So this is our inflation measure from the consumer side of the economy, and it is certainly a very strong reading to watch. Last month's reading beat expectations, and we want to see if we're able to beat them again this month. There's a lot of different debate on whether the Fed's going to hike another 3 times this year, 4 times, 2 times. However, we're going to really have to watch to see what this data comes out with to determine that. So this is one of the strongest pieces of data watched. And mixed jobs last week. Now we have this week. Definitely want to be watching this. Canada's Bank of Canada Governor Polo's speaking also on Tuesday. He's giving a speech about the job market in Canada. Could impact the CAD, but nothing too crazy. Then later on that night, we have the industrial production out of China. This is going to give us the overall value of the output produced by the manufacturing and mines and utility indexes, the utility industries and all in China. And again, they're the second largest economy in the world, so their data impacts global markets, and their economy's well-being has an impact on the rest of the world, so it is something we want to watch. Wednesday, next week, March 14th, we have the ECB President Draghi speaking. He'll be speaking at the ECB conference. Nothing too impactful, nothing really in the content he's speaking about that we want to worry about. However, you never know. He could say some stuff that will cause some movement in the euro or ask some questions. But something to be watching. Whenever these central bank heads are speaking, we want to be aware of it. U.S. dollar then has retail sales on Wednesday. Missed the last 2. We've had some pretty weak readings out of it. Last month was a really weak one. So we're going to have to keep an eye on this retail sales to see if this turns into a trending thing. which could be a bad sign. Consumer spending is what makes up retail sales, and this is a huge portion of the economy. So if consumers are starting to spend less and start feeling less confident, this can have some serious impacts on the rest of the economy. So we definitely want to be keeping an eye on these numbers. Then we have the PPI data, the second inflation data out of the U.S. This is going to be the producer price index. So this is the production side of inflation. With the consumer price index, CPI, this is going to be the value of goods and all bought on the consumer level. So the eggs you buy at the grocery store, the milk you buy, the gas you buy, all this stuff. And then the producer price index is going to be from the production side of things, the steel bought to make your cars, the wheat bought to make your cereals and pastas and grains and all these things that are bought and then produced to create the goods that you buy. This is that inflation reading. The CPI reading is definitely more watched and more accurate as far as inflation goes, but PPI definitely can be a market mover. Last reading, not really reaction as expectations were met, but if we have a miss or break in either direction, this could be a strong trading event. Then Wednesday night, we have the New Zealand dollar's quarterly GDP report. Again, this is the gross domestic product, the strongest reading of the expansion and growth of an economy. Quarterly report out of New Zealand, as expected, the last two. Strong reaction usually from New Zealand dollar. Again, this is more likely to be strong when there is a miss or a beat of the expectations. However, it is still a strong report to watch and gives us a good idea how the performance of the economy in New Zealand is going. Producer price index out of Swiss franc, not very important news, and it is also followed by their central bank interest rate meeting, so it will most likely be overwatched. They're expected to stay at their negative 0.75%, negative 0.75%. Last meeting was back in December. Not much changed at all in their monetary policy stance. So we'll see if anything changes here, but I doubt it. Swiss franc has been selling off lately, and they have been mentioning in the Swiss National Bank central bank meetings that they thought it was overvalued, the Swiss franc, especially versus the dollar and such. So we'll have to see if they like this sell-off in the Swiss franc, if they mention it, if they don't mention it, or if they still think it's overvalued, and see if the Swiss franc has any reaction to that. But we're going to have to watch and see if they change any monetary policy stances or anything. That's pretty much it for Thursday, other than some medium, not too impactful news. And then on Friday, we have Europe's final CPI year over year. Again, this is the second of two inflation CPI reports. The flash is the first one. And when you already have the first flash initial report out, the final CPI report is really not anything too important or anything we want to really watch. But, still want to be aware, because if that number does come out missing flash by a decent amount, that could cause some movement. And then, not really a big event, but we have U.S. dollars capacity utilization and industrial production, the output of manufacturing, mining, utilities, and all, like I said, for the U.S. economy. But not a big market mover, nothing really too exciting going on. This could give a little bit of stimulus to the dollar on a Friday morning, but not much going on. So pick the times you want to trade this week, everybody. Pay attention to the technicals. Technical analysis is going to be more heavily weighed on this week, as there's not much in the event department. Tuesday, expect strong moves out of the dollar. Wednesday, we could expect to see some follow-through. Swiss franc, Thursday, early morning. Look for trading on that. And then really that should do it for the week. Friday, Monday, Sunday, wouldn't really be looking to trade this week. Tuesday, Wednesdays are main days, but Thursday as well with the Swiss franc. So thank you guys. I really hope you enjoyed these videos. Please feel free to reach out to me with anything you have. Corey at corefxtrading.com, Corey at corefxtrading.com is my email. If you guys have any questions, post a comment on here. I'll see it. However, if you guys have any questions about anything, want me to cover anything, want to check out my course, anything like that, please feel free to let me know. Thank you all. I really appreciate all the support. Please continue to like and follow T3's page. They're a great page and provide really a ton of free, awesome content for you guys, which if you're in this trading world, you understand how valuable information can be, and when you can get it free, that's even better. So thank you guys. I appreciate it. I won't be here next week, as well as I already told you guys. However, I'll see you the following week. I hope everyone has a great trading week, and I will catch you in the next time. Thank you guys.